Hello, computer accountants. Hello, welcome to another year 2026. Great things. We'll continue to do great things even onto this new year. Okay, today I want to answer one question that a lot of us have called me and gotten in touch, sent WhatsApp, and that is how to manage both tax inputs and tax outputs in using any of the software. So today we'll be tackling that using QuickBooks Desktop. Okay, it's and I'm going to show you two ways. So you're going to be two parts to this video. The part A will look at a method, then the part B will look at another method. The important thing is that you arrive at the same result. It's the same accounting laws, procedure, and policy that will guide us in achieving this. Sometimes you have to improvise. The software might not really give it to you the way it should, but you don't have any choice than to improvise. So if you don't know how to work around this application, you can always improvise on this, bringing improvise solutions on getting your job done and reaching your financial statement. So you can see that our chart, we have everything in this business. We have our chart, our customer names, and the rest. So it's not going to be a full posting. I will just take just one samples just to arrive at what we want to do. Now I have set up my chart of account, including the VAT ledger. This is a scenario where both the input and the output will be in the same ledger, so they will net themselves off in the same ledger. Okay, so which one is higher determines what I will remit to the tax authority or the refund. And you know that normally if the tax input is higher than the tax output, so it then means it's going to be a refund or a tax credit to you, to the favor of the business, or a refund that the tax authority will give back to me as the business owner. But if the tax output, what I collected from my customers, is higher than what I paid to my suppliers, then I have to remit the excess to the tax authority. Okay, but on the other hand, if what I collected from the customers are lesser or is lesser than what I paid to my vendors, okay, then it then means that I'm due to refund, or there's a tax credit on my behalf or in favor of me that I can also use to claim for other years, So now this is the procedure. I'll allow you to do your research on this tax stuff, but I'm just showing you this procedure. My goal today is to show you two different procedures that you can use on QuickBooks and you still get your result. Okay, so the first thing you have to do is to create tax, both the input and the output. So like I said, your goal is to create both the input and the output as an item list. And I'm going to show you the type of item. The only thing you are going to do on this one, you are going to lose that right of automation where the system does the calculation by itself, but you can do the calculation manually, so that's not a big deal. So I'm going to show you the first one, a scenario where you create just one chart of one VAT ledger where both the input and the output VAT will be netted off, so that it will now give us the excess or the shortage in terms of which one of them is bigger, whether the tax input or the tax output. Okay, so I have created my VAT as a, which is other current liability. You can also make it a current asset if you wish. Okay, so the next thing is to now create the name, the input VAT and the output VAT as a functional or operational name. So you go to list and select item list. So I'm going to, these ones I'm going to remove them because it was wrongly done. So I'm going to remove this. Okay, so let's take care of us. So you go to right click, select new. Now why I deleted those two, because they were created as from the automated side, sales tax item, but because I'm going to calculate the tax manually, okay, in order to get the two, okay, and have them netted off in one account, I have to create each of them as other charge. Okay, so if you look at this, you can see why it was done. So I'm going to do input VAT in brackets purchases. Okay, so copy and paste. Then now link it to the VAT in the ledger, VAT as a ledger. Next, output VAT in bracket, that's the one you collect from your customers' sales. That comes from sale of products, while the input comes from purchase from your suppliers. Okay, so it's linked. I'll click OK. So all is taken care of. So I have to go to transactions. So let me purchase a product from my vendor. It can be on credit, it can be fully paid. So you cannot say because you are buying on credit you are not going to pay VAT. No, VAT is a constant. Buying a product on credit or part payment or full payment is a business relationship. It's just meeting up with the business. Based on the relationship you have with a business can decide to make part payment purchases or sales to you, or part payment, full payment purchases or sales to you, as the case may be. So but VAT is a statutory issue. By the way you purchase your product, it's not statutory because it depends on the business standard rules and regulations. But statutory, the government, you must participate in helping the government to get it. Okay, so let's assume he's buying this product on credit. We are going to buy a product on credit. Okay, so we are purchasing this product on credit from King Joe. So we are buying a handbag. We are buying handbag quantity, I hope it's there, let's say 200 at 5,000. Let me increase the quantity or the amount. No, let me increase the quantity to 2,000. It makes some that's 1 million. Now what's the VAT? Now what this one attracts is the input. You can see, because we are purchasing, is the input VAT. You can see, so that automation is no longer there. I'm going to calculate 7.5 of 1 million. I'm going to do it manually. So you have yes, my calculator. 7.5 times 1 million divided by 100, that is if I get it, 75,000. Okay, got it. So this is it. Then I will save. That's the VAT. I will save. Now let's look at the other side, where we are now going to sell the same number of products. So you have create invoice. Now we are selling. The first scenario, we bought from our vendors. They have to put that input VAT there. Okay, now we are selling to the customers. We now have to charge them for that output VAT. So let's say we are selling to Kev, quantity same 2,000. I'm just netting it off. Where are we? Handbag. I got it. So this is the 1000. So the rest is the output VAT. So that is 7.5 of 2 million. 7.5 times 2 million divided by 100, that is 150. You're looking at 150,000. Okay, so this is it. This is what we have. So save and close. Good. Now let's now find out if we are to get a tax credit, or we are to actually pay to the tax authority. Now you go to your reports, go to company and financial. That should be our balance sheet. So balance sheet will tell us whether we are. So if you look at this, you can see the VAT here, 75,000. So let's zoom it and see whether we are. Now you can see that means that we've collected more than we have paid to the supplier. It then means that this 75,000 will have to be paid on that day of remittance to the tax authority, because we have collected more. So it's a simple equation where the output is greater than the input. That's what we have here. As long as the output, what the tax you have collected from the customers, as long as they are greater than the one you have paid to the vendors or suppliers, which is the input, then you have to remit the excess to the tax authority. But if this place is showing minus 75, it means that we have collected less than we have paid to the suppliers. In that regard, we have a tax credit, or we have to be refunded by the tax authority, or we have to lay it claim for future tax responsibilities. So on this scenario, you can see that it's showing positive. Is showing positive, which means there's an excess. The output is greater than the input, so this is what we'll have to remit. So from here, it means that what we have to pay to the tax authority as VAT collected for that period is 75,000. So the question is, how do I net it off? Simple. So for you to pay them, you go to banking. I have to leave this place open. So go to banking and select write check. Write check simply means money being paid out. So, and we are paying by bank. It can be through bank transfer. Let's say First Bank. So who are we paying to? We are paying to FIRS, our tax authority. So the account to be debited here, because they are receiving, is the VAT account, and this is 75,000. That's what we are remitting. Then don't forget to do your put in your description, explain what you're being tax remittance for the period or for the month of January, blah 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 blah. So having done that, we'll save. So if you look at this, our balance sheet, that VAT has been remitted. We are no longer owing anything. So you can see it here, because our First Bank, we paid from nothing. So it's showing you that it was paid from First Bank. That's why our First Bank is showing 0. We paid from nothing. But the important thing is that tax liability on our head has been paid, and we are no longer owing the tax authority for that month. So this is the first leg. Okay, what we did here is that we have to create the tax inputs and the tax output as a charge, and both of them were netted off in the VAT ledger, which is a current liability. So from there we now made our payment. So the second leg I'm going to show you is a different ball game, where the tax input is, because it's seen as an asset to us, while the output is seen as a liability, so the asset stays in our the asset side of our balance sheet, while the liability stayed in the current liability asset of our balance sheet. But the question is, how do I now net off the difference? Okay, so thank you. Don't forget to subscribe. The new year is coming with great things. Don't forget to subscribe, share, like, and comment. And don't forget to ask us questions. Whatever are your challenges, please ask us. I have gotten a lot of calls on this tax input and output, so that's why I'm making this video. So see you in the second part of this video. Bye. Okay, welcome to the second part of how to manage VAT inputs and how to manage input VAT and output VAT using QuickBooks Desktop. For the QuickBooks Online, it's an automated thing I have already taken care of. If you go to our YouTube page and watch our videos, you see the way it is done. QuickBooks Online makes it highly automated. It will just take both the input and the output and work out what you should pay. I've done that video, so I'm going to show you another way on how most different companies approach these things differently, but I can tell you and I can bet you that you will definitely arrive at the same result no matter the pattern. So it depends on the accounting policy that guides your business. It depends on the accounting system that guides the country where you belong to. But at the end of the day, accounting is not law where 10 lawyers can see one issue differently. Accounting is what it is. It is white everywhere. You can look at it from different corners. It remains white. That's what accounting is. Okay, so because it's all about the figures, you cannot put in 1 and you are getting 100 in accounting. And accounting, you put in 1, you are getting 1. If you put in a capital of 1 million, at the end of the day, you must see your 1 million in the balance sheet. Okay, then if the capital increases, you must see the impact, the figures that have brought that increase on your capital. So that's accounting is just what it is. Okay, so I'll go back again. List with the VAT account as a ledger is already created. So I'm going to item list now. So the first I'm creating is the VAT input. Okay, so using order charge. So we are looking at VAT input that has to do with that you incur at the point of purchasing. So here it is. Now the linking will change. It's going to be a current asset, not a liability anymore. So I'm going to create an asset account. So you have VAT input, you have current assets. So save and close it. Okay, that's it. Then the second leg, which is the VAT output, will now be automated in nature and is going to be a liability because that's what you collect from your customers. Remember, why is VAT input an asset? It's just more like a receivable. It's what you have paid into the hands of the supplier. So it's an asset until it is netted off. It remains an asset in their hands. So it's to your own favor. But the one you collected from your customers is a liability. You've collected it on behalf of the government, so you are liable to it. You are meant to remit it back to the tax authority. So that's why it's a liability. So I'm creating that now. Go to new, then go to sales tax item because I want it to be on automation. So you have output VAT in bracket sales, copy, paste, and it's 7.5. Then it will be remitted to FIRS. Okay, so I'm good to go. So okay, it forget about the dictionary, doesn't matter. So now let's make some purchases now using the same scenario. So this is vendors purchases. So I'm can use a different vendor now. Morgan now. I'm buying items from Morgan. I'm buying suits. Quantity 1000. Let me see what 1000 can give me. I want it to be, okay, 1000 pieces is 700. So what is 7.5 of 700? Let me do the calculation. 7.5 times 700 equals divided by 100. That is 52,500. Okay, so 52,500. So save and close. It says you have no item. Don't worry. Let me see why. Okay, see what I jumped. That's why it's popping up. I didn't give it a row where it belongs to. So this is, I have to put in the amount again. 5,500. Okay, so I think we are good now. Save and close. So let's see where that money dropped. Reports, company and financial, balance sheets. They are all balance sheet activities. So you can see it's an asset because we paid it to the suppliers. It's an asset to, it's more like a recoverable asset, account receivable. So it's an asset to us. But the one you collect from your customers is a liability to you. Then you now net them off to know whether you are remitting or you are claiming a refund, or you're on a tax credit. So let's now sell and collect from our customers. So I'm closing this. I have to zero my calculator. Then I'll go to customers, create invoice, sell to McDave, quantity 1000 again. Then item code, that is, we are selling suits. Okay, so this is it. Now you are now add the VAT, giving us 1.290 million. So I'm going to save and close. Okay, so let's look at the balance sheet. Let's see the effect of this two arrangements, both the input and the output. So we go to reports, company and financial, balance sheet standard. You can look at the details and the rest. So you can see, look at it here. So this is, I can rework this name. I can change this name to input VAT. I can do that. Still change the name to input VAT. So let me go to item list. See why. Okay, so this is why it's showing that. So edit. Let me take this thing out and click OK. Then also go to the VAT in the chart of account and see the name. Or where is it? So this is it here. So let me change the name, edit it to output, output VAT sales. Yeah, then save and close. So let's go see how our balance sheet is right now. Company and financial, yeah, my battery. So you can see it here. So that's the output, and this is the input. So I think my battery is giving me some. Let me just give it some life. Okay, then I will now show you in the third layer. I will now show you how to net these things off so that you clear them especially when you are able to determine which is higher. Are you remitting or are you receiving a refund or tax credit? Then how to net it off. Okay, so you can see from our balance sheet, you can see the VAT collected, you can see the output VAT. You can see the output VAT, the one we collected from our customers, totaling 90,000. Then you can see the input VAT that we paid to our vendor. So it's most likely that we have collected more. We have collected more than we have paid. So that means that the excess has to be remitted to the tax authority as our tax liability, because the output is higher than the input. So let me show you how to effect it. So this is where the general journal comes in. So you use the general journal to net off this thing, and when we come back, you will notice that they will no longer be in our balance sheet because we have paid the tax that is liable, the VAT that is liable to us. So let's get that done. You go to company menu and select make general journal entries. So this is it. Now remember, the tax output is a liability which takes a credit balance. Now it's going to take a debit balance because we are netting it off, we are zeroing it. So I'll select the VAT output, that is 90,000. Then the input, the VAT input is 52,500. It was formerly an asset. Now that we are netting it off, it will take a credit balance. Okay, so when you want to reduce the value of a liability, you make it a debit balance, this vice versa a current asset. Now what are we now paying? What's the difference? So what we are remitting, because the output, what we collected from the customers, is higher than what we paid to our suppliers at the point of purchase. It then means that we have a liability of 37,500. So this will now go out through our bank. Okay, then who are we paying it to? The name is FIRS. So just then you now make your narration. Let me just call it VAT remittance. Forgive me for that spelling if it's not wrong, if it's not correct. Have mercy on me. So VAT remittance, I think it should be double T. Okay, I don't know. So that's it. So you make your description. So if the spelling is wrong, please forgive me. the brain is handling a lot of things. Okay, so you can see it. So this is what is going to the tax authority. So I have netted off these two. So you click, and the date of remittance as well. So save and close. So let's see. Now you can see this is because our bank is zero, so we are paying from nothing. That's why it's showing minus. That one is understandable. But if you notice, the VAT input and the VAT output are all gone because we have settled them. So these are the two layers, two methods you can use to sort out anything that has to do with VAT liability. It also depends on the internal mechanism of your organization. What is your accounting policy? What is your country's accounting process, and the rest? So which one, like I said, whichever method you are using out of these two, you arrive at the same solution, the same amount of remittance. So that is it. So thank you. Don't forget to subscribe, don't forget to share, like, and comment. Thank you all. It was a wonderful year last year. You people, in your effort, we were able to cross the 1,000 subscription threshold. So great things are coming. Like I said, this vision will bring good to everybody's knowledge world and knowledge tank. So thank you. I hope you enjoy this video. My name once again is Onyekachi Nwa Ozuzu, your preferred accounting software specialist, your preferred data analyst, your preferred business analyst, and your preferred project manager. Thank you, and thank you for being for all of us, giving all of us the opportunity to be a blessing to one another last year. Thank you. See you in the next video. Bye bye.